requested the case against Bitcoin, although I could not put a presentation together that is just the case against Bitcoin without sharing the counter argument. All right, here we go.
About 5 years ago, we asked Charlie Munger, we were sitting right there, what he thought of Bitcoin, and he said rat poison. Yeah. Back then it was about $100+ per Bitcoin. Today it's 9,000. Is it still rat poison?
Well, probably rat poison squared.
Rat poison squared. So some of these we can debunk, but all of these are various buckets of reasons why people are criticizing Bitcoin. There's a big bucket that it's like bad for society for all of these reasons. It's dangerous, it's a scam, it's crime, it's gambling, or it's unfair, meaning it's wealth inequality, or it's too much energy use, it's environmentally unfriendly, or that it's failed, as in like there's just no use case for it, it's useless, or it's just not really a good product, or that it will fail because the government could ban it, or the internet just isn't reliable, so how can we trust it, or economically it's just not going to work as a currency, all of those kinds of things. So bad for society, already has failed, or it could fail in the future, kind of. All right, so number one, is Bitcoin a Ponzi scheme? It's just a Ponzi scheme. They might say, well, it only works because people keep buying in. There's no product, no dividends, no real use, just hope that someone else will pay later. So it could resemble a Ponzi scheme because you're essentially relying on the price gains. So the people who already bought in are relying on new people buying in for their shares to be worth more. And that's the essential, that's the whole price movement of it. It's just a Ponzi scheme. And they say that like the people that buy in early have the highest benefit. And so that's really just Ponzi scheme, speculative bubble type stuff. And here's a guy, Peter Schiff, where he kind of explains.
Okay. Because Bitcoin depends on more people coming into the ecosystem and buying, because that's how the people that are already in can get out. You have to have more people to buy what they're selling. And I know a lot of people just don't sell any Bitcoin, and that helps keep the price going. But people do sell, and you need new buyers. And just the people that are already in, may not be enough because they've already bought it. But eventually there's always a group that gets left holding the bag, because it's not a wealth creating system. It's just a wealth transfer mechanism. Bitcoin or none of these crypto tokens represent any real wealth. I mean, they're not valuable commodities that we use. They're not income producing assets. They're not factories that produce goods. They're just digital tokens that do nothing. And just because we have a bunch of them doesn't mean we're wealthy. But what happens is some people that bought early, they get wealthy because the wealth is transferred from the people who get in late to them. And you always have the bag holders, the people that get in at the end, and their losses equal the profits of the early adopters who cashed out. And so I was suggesting that people consider where they think we are. Because if you're coming in at the end, you're just going to get left holding the bag as the market implodes.
So you think we're coming to the end of an era, a Bitcoin era, you would say?
Well, we'll see. I mean, is there going to be another leg with all these politicians and Wall Street money? Or, is this, again, evidence of a massive top when you have this kind of euphoria?
But we've had multiple tops, wouldn't you say, like peaks in bull markets?
Yeah, we've had peaks that turned out to just been temporary, and all the pullbacks have been bought, and we've made new highs. But, the progress has been slowing. Because if you look at the peak, right, in 2021, that peak, and measure the price of Bitcoin in real money, gold, right?
All
Not
right, so
dollars or
this goes on and on. If you want to hear all of his arguments against Bitcoin, you can check out that video. I do have a couple of other clips from him too, because he is a prominent opponent of Bitcoin. But ironically, he spoke at the Bitcoin conference. He was one of the big speakers because he's a proponent of gold. He still agrees that our fiat system is completely broken and that fiat is shitty, but he thinks that gold is the answer. So yeah, and this entire interview and his talk at the conference, which was also recorded, gives his reasoning for that without any counter arguments. There is no person or institution with more than 5% of Bitcoin at the moment. And it's really difficult to get more than 5% now. Like, really difficult. Satoshi Nakamoto, the one individual we think, but it could be a group of people, we don't know, owns 5%. But it's the creator of Bitcoin, hasn't sold a single thing. So great. And then after that is Strategy, MicroStrategy, the company, and they currently hold about 3% of the total supply, which is uncomfortably a large amount, but still it's only 3%, and they can't just take everybody's money. They could sell their portion and it would still survive. The other distinguishing part is that there's no promised returns or guarantees. Everybody's like, yeah, invest in Bitcoin at your own peril. Like, we're not out here being like, you got to get in. I promise you'll get 100% return. Also, like, Ponzi schemes are not transparent. You don't really know where the money is, what's going on, how much, like, it's just not transparent. They usually hide things, but pretty much the entire Bitcoin ledger is transparent. You can see everything. If somebody moves 80,000 Bitcoin, which they have, the whole internet gets in an uproar because they can see the transfer and they're like, ooh, what are they going to do with that money? I like this guy, Bram. He has a podcast called Bitcoin for Millennials. I relate. He asked Grok to please compare the global debt-based fiat monetary system and Bitcoin and analyze which of the two is more likely to be a Ponzi scheme based on its characteristics. Include reasoning as to why or why not and a probability percentage. And this was the answer. Fiat money relies on a perpetual debt expansion to pay prior obligations, eroding the value via inflation. It's Ponzi-like as new money funds the old without any real backing, risking the collapse without growth. And the head of the government is at the top of that. They have all the control of that. Whereas Bitcoin is decentralized, there's a fixed supply, there's no central authority. The value comes from scarcity, not new entrants paying the old. So fiat is more Ponzi-like with a 70% probability, whereas Bitcoin has a 10% probability of being a Ponzi scheme as an asset, not a scheme. Case against Bitcoin number 2. There's no intrinsic value. It cannot be valued. It is not a business. It's not backed by cash flow. You can't buy it and then get cash flow out of it. There's no way to price it. How do you price this thing? You can't price it like you can price other commodities like gold and corn and stuff. So yeah, how do you even price it? Why should it be valid? What value does it even have? Even gold has industrial use, so you can value it because you can buy actual gold necklaces and gold bands and jewelry and stuff. Whereas Bitcoin is just digital scarcity. That's the value. And it could go to zero. Let's hear what he has to say on this.
it's going down.
But you also mentioned that Bitcoin has no intrinsic value. what does intrinsic value really even mean?
Well, again, you have to separate Bitcoin from being able to be used as a medium of exchange.
But why?
From
Isn't that the main theory of it, though? Like
no,
electronic cash system?
the origin of money. Why is gold money? Well, I mean, gold is money because it's a commodity. So it represents real value. You're wearing some gold jewelry, right? Jewelry is one use of gold, but there are a lot of other uses. It's the most useful metal that we have. It has properties that are very unique to gold and extremely valuable for all sorts of industrial applications, right? So gold has value. If you've got something that you want to sell me, I can pay for it in gold. You can give me a valuable good, and I can give you something valuable in exchange, as opposed to barter. Like, in prison, cigarettes are money.
Exactly.
Why are cigarettes money? Because you can smoke them, right? Because there's an intrinsic value of a cigarette. But let's say we're in prison and you want to buy something for me and pay me in cigarettes. Even if I don't smoke, I'll take the cigarettes because I know somebody else does. And even if the other person doesn't smoke, they'll take it because ultimately someone's going to smoke those cigarettes. So you can smoke a cigarette, that's the intrinsic value. There's nothing you can do with Bitcoin. You can't smoke it, you can't do anything with it except give it to somebody else. Gold, I can use my gold as medium of exchange, but I can also melt it down and make jewelry or conduct electricity.
But you can't do that with actual fiat, though, like
That's
paper
what,
money.
fiat currency isn't money either. It's currency. The difference between currency and money, currency is a money substitute. Now you can have legitimate currency that's backed by money, right, which would be gold, or you can have fiat currency that's backed by nothing. And the fiat system is bad. Fiat currency works well for a while, especially as a medium of exchange, unit of account, but it's a lousy long-term store of value. That's why it's not good. Gold is much better. And when you talked about AI, we can take gold and bring it into the future using the technology of the internet or even blockchain. You can tokenize gold, and now ownership of gold can be represented digitally and be transferred right, from peer-to-peer all around the world, quickly, inexpensively, much faster, much cheaper than Bitcoin.
To do that.
But Bitcoin doesn't do it well. It's slow and expensive.
But how would this token with
but I think there is a difference between what is Bitcoin? So as a thing itself, right? It doesn't produce. So like when Warren Buffett says that Bitcoin is rat poison squared, he's a value investor. So he buys companies that he think he can create income streams with. So he's going to buy a farm because you can use the land to make corn or to make, whatever you want to make, right? And then you can sell that, and then you have an income stream from that investment. It has value because you can turn this asset into income, right? And he can, value the land and then value how much people are going to pay for the corn and how much the farmers' labor cost. And so he can run, spreadsheets to figure out what the value is of that purchase, of that asset, right? So the criticism of Bitcoin is that I can't create a spreadsheet to figure out how this is going to cash flow for me. That's basically the argument. So the big difference here is that when people like Charlie Munger and Warren Buffett and all of these value investors say that Bitcoin is useless, there's no intrinsic value, that's what they're talking about. They're talking about we can't cash flow it. We can't figure out how much it's going to be worth. It doesn't seem to do anything, so they don't see the value in it. But what they're not seeing is that they're not seeing that it is money, and no money has intrinsic value, right? Money is valuable. It's the money. It's not the asset, right? So it's not money can buy assets. This is the money. So the money, like money, it's the fiat currency doesn't have intrinsic value either, right? Gold also doesn't have yield, right? Gold, you don't buy gold and then it doesn't cash flow for you. You don't buy gold jewelry and then be like, oh, I'm gonna be able to like rent out my jewelry. I mean, maybe that's how you can cash flow your jewelry, your gold, but like that's, you know, that's creating a business, right, out of an asset. But intrinsically, gold doesn't have that, right? This is about the myth of intrinsic value, which I found really helpful. But so the guy who put this together, he says true intrinsic value can only exist in what is universally interoperable between the minds of all rational actors. Everything else is merely ascribed value. Like Bitcoin has ascribed value, but not intrinsic value, right? So, and then the rest of this website is saying, okay, the fallacy of gold. So gold is like this other guy was saying, oh yeah, gold has intrinsic value. But this, he says, this is a fundamental misunderstanding. Gold's value is the value someone else tries to impose through the argument of you ought to see that this is valuable. Arguments like it's valuable because other people find it beautiful, or because it can be used in electronics, or because people have always valued it. Like, isn't that sort of circular logic a little bit? Like, that's not intrinsic value. So then going back to like the water and air and forest arguments. So if real world utility, intrinsic value, determined the monetary value, why aren't wheels or fire used as stores of value? The fire is very valuable, right? Wheels, very valuable. They provide a lot of utility, and yet we don't really pay much for it, right? Like it doesn't really have monetary value in itself. So sound money isn't based on utility value at all. If we're talking about Bitcoin as money, then it proves that utility and monetary value are completely different properties. So this argument is null. If you want to read the rest of this, it is there for you, but we must move on. The Satoshi's Notebook, The Myth of Intrinsic Value. There's more there. I also like this. Stop asking how to value Bitcoin. Start asking how to value everything else in Bitcoin. A Bitcoin denominated DCF, which is a cash flowing model, changes how we value everything. So there's actually a browser extension, I think a Chrome extension, where you can, it'll automatically tell you how much something costs in Bitcoin. Like, so that's kind of, yeah, it's kind of interesting. But you can say reprice, they have this thing, repricing the economy in Bitcoins. You can actually see how they're valuing other things against the sound money. Okay, but Bitcoin's too volatile to be money. One day it's 60,000, next week it's 45, then it's 100. Okay, so that's not a currency, that's just a roller coaster. Who would want to save or spend in something so unstable? So this is also a very common argument. You're like, okay, well, if you're saying it's sound money and that it's a currency, well then like it doesn't even meet those criteria because it's so volatile. You can't use it as a store of value or medium of exchange, which are things that are necessary for money. And that, you know, the dollar is technically stable, right? Your purchasing power keeps going down, but the value of $1 is always $1. But they're saying that it needs to be stable, that you need to kind of like, it needs to be like, okay, this thing that I have over here, like today it's going to buy me this and tomorrow it should buy me approximately the same amount, right? Rather than like, well, if you like, you're like, well, I mean, if it's 120 today and then it's 100 tomorrow, I'd rather wait like until I'd rather like buy it now. But if it's going to go up, then it's like, well, I'd rather wait to buy it because it's more valuable later. So you start playing that game where it's like, it's not stable. So it's not really able to be used to buy and sell goods.
If you had to choose between free Starbucks for a whole month or 1 Bitcoin, what would you choose?
Starbucks, probably.
I would agree with Starbucks.
Starbucks, better choice.
Free Starbucks.
Okay. Why is that?
I've heard stuff about Bitcoin. For some people, it's profitable. For other people, it's not. So it's a 50-50, and I don't have time to like take risks and chances on stuff like that.
So it's just kind of shocking that like people just don't know.
Yeah.
I would also say I would not argue that Bitcoin is not currently a currency. Like it doesn't really act as a currency right now. Some people do buy and sell goods with it, yes. But the volatility right now is part of the process, right? So it's trying to find the price. It's trying to find its value, right? Like it's part of that. So every currency that's ever existed was always very volatile at the beginning. So no, you can't use it really as a currency right now unless you have a lot of money. And if you just have like 20 Bitcoin and, you just wanted to live your entire life in Bitcoin, you probably could, because you'd be like, well, there's still going to be enough to go around forever. So no big deal. That's like Jack Mahler's, like he has his entire net worth all in Bitcoin. And so he just uses it like currency, like cash. He just uses it like he would US dollars. And he doesn't really care what the price is when he buys and sells, because he knows that he's going to keep buying and selling and that he's going to keep getting paid in Bitcoin. And so to him, it is a currency. Yeah, the volatility right now is like it's a feature, not a bug. It's not like a problem with it, right? And then there's, again, Satoshi's Notebook, really great content there to really like understand the nitty gritty of all of this. He talks more about understanding the volatility of like early currencies. So you could go deeper into that if you would like. But we are going to keep trugging along because I'm conscious of time. Next criticism is that Bitcoin's bad for the environment. It consumes a ton of energy. It could consume as much energy as like an entire country, and that a lot of the Bitcoin is mined with really unsavory energy sources. Bitcoin mining does take energy. That's kind of what gives it its value, because you're taking real energy and storing it in this Bitcoin. Like you can't just get a Bitcoin by doing nothing. You have to actually convert energy into Bitcoin. That's what gives it its physical value, essentially, right? But this argument that it's using up all the energy is probably not accurate. What else right now is using up a lot of energy? AI. AI is using way more energy. And you know what? No one's being like, we should stop AI. It's hurting the environment. No, we make these trade-offs all the time. So you can say that Bitcoin has a poor environmental impact, but you could say that about the AC that you run and the AI that you're using and like the car that you drive. Like we all do use these things. And so, put it on a level playing field. The benefit is that Bitcoin mining actually, it creates economic incentives for the miners to find renewable sources of energy. So it forces them, because it is expensive to mine. And so, and they know how much they're going to get from mining it. So they have to make sure, like as a business decision, the energy has to cost less than X amount for them to even be profitable. So they have to find renewable energy sources that are not super expensive. And they're actually, these mining companies are actually then building renewable energy infrastructure that could be used for other things. For example, AI data centers and Bitcoin mining companies are increasingly being housed in the same area. So when you have you have a data center being powered by this source. So this power source, when the Bitcoin miners might be mining when that power is like free, whatever, or when it's economically viable for them to do it. But if it starts to become too expensive to mine Bitcoin, well, they move over to it's now powering AI. So it's like these centers are actually like using energy more efficiently. They're taking advantage of energy that was just going uncollected, essentially. And there's a lot more about that. And then, yeah, so studies show 59% of the energy used to mine Bitcoin is renewable. And that's pretty high compared to most other. I'm sure AI is not that high. But doesn't Bitcoin just make the rich richer? It's going to exacerbate wealth inequality. And those people that bought like 100,000 Bitcoin and like they're basically just going to own everything and they're going to have all the money, and we already have inequality and it's just going to make inequality even worse. If there's any argument, like case against Bitcoin that I can think of, like this is maybe one of them, but actually it's not, because it's still a better solution than what we have now. But there is a significant risk of wealth inequality getting worse. But even if Bitcoin didn't exist, we still would have that problem, because poor people still can't make more money and the value of their money is decreasing while the value of rich people's money, just keeps going up and up and up because they're in assets, not in the currency, right? So yes, there is a risk of wealth inequality increasing. But it would do that with Bitcoin or without. And the problem with the US dollar fiat currency is that it already benefits the people that are closer to the money printer machine. It already benefits the bankers and the wealthy people before it benefits the poor people. So the wealth inequality is already happening with the US dollar. The other problem is that generally right now speaking, like most poor people are completely priced out of buying any. There are many poor people that are priced out or not allowed to buy any asset that would actually store the value of their work, right? So they can't get bank accounts to even buy stocks, or they just don't have the capital to buy a house. Like there's such a high barrier to entry. Or maybe you wanted to get in on an IPO. Well, the rich people are the only ones who can get in on IPOs. It's not even available to people like me. Like the barrier to entry for an IPO is like way high, right? So already we have a system that is making wealth inequality worse even without Bitcoin. So the way I see it is that Bitcoin at least allows anyone who wants to buy it now, to store their wealth in it now, and they could buy as little as $1 or 1 Satoshi, right? And they could just be saving whatever dollar they have left after the end of the week or end of the month, right? It is available to those who know about it. And so the only barrier to entry and the risk of wealth inequality is if we don't educate poor people about this opportunity. Like when I said that this is increasing wealth inequality in our country, which is a problem, but there's also much more massive wealth inequality compared to the US to like third world countries, right? Like other very, very, very poor countries. And we're actually seeing like a leveling of the playing field, because now people that are at the poorest level in countries where they barely get clean water, they now have access to the same type of currency or money that everybody else has access to. Nobody's blocking them out. And so they have the opportunity now to create wealth for themselves. And there are certain countries that are embracing this, especially in a lot of them in Africa, right? Who are embracing this because they're young and tech savvy and poor as fuck, and they don't want to be anymore. So the countries that are embracing this, you know, have the possibility to turn into very wealthy countries. So it has the possibility to redistribute wealth around the world so that the US is not the holder of all wealth in the world. There is a thread there if you wanted to look through. There's 670 replies for responses to this, which I thought were, some of them are interesting, some of them are just a little like, well, the opportunity's there, go get it if you want it. When we live in America, you know, go chase the opportunity. Moving on. Okay, so the Atlantic. This was just a year ago that the Atlantic said 15 years into existence, Bitcoin has yet to demonstrate any serious use case. And this is a very common argument that just like, oh, it has no utility. We're not going to touch on this too much because we kind of already did a little bit, but that it's like, it's not useful. You can't buy groceries with it. You can't pay rent with it. Like it doesn't really have any value. It's slow. It's not widely accepted. So what are we doing? And this goes a little bit to what we were talking about as far as like, what are the other sources of like utility for Bitcoin right now? And you were mentioning, you know, well, the utility is that, you know, there's the network. That's sort of like what gives it value. But practically speaking, it is having utility. Like this is just not an accurate statement to say that it has no use case, right? Because it is actually being used as an inflation hedge in countries where their currencies suck. It is being used in warring countries, right? And it is being used in certain other countries like El Salvador, where they actually are using it as a currency. And this was a really good talk. There's a group called the Bitcoin Policy Institute. And this guy gave a talk called Bitcoin is the most important human rights technology of the 21st century. So if that's not a use case, what is not, right? And they make a pretty good argument for that. But yeah, it's almost like it's ethical. It's an ethical technology. It's creating opportunities and human rights for people all over the world. All right, so scalability. This is a little bit more technical, but people will say that Bitcoin doesn't scale because it's slow. So they'll say that so Bitcoin takes 10 minutes for a transaction to settle. So they can only process seven transactions per second, I think, whereas Visa can process 65,000 transactions per second. So the Visa, MasterCard, whatever, like those rails are faster. So that means Bitcoin's not as good. And then a lot of the other cryptocurrencies like Ethereum or XRP, Solana, like those are other cryptocurrencies that are faster. So they will settle payments much faster. They're called the Lightning. Oh my God, what's it called? The layer 2, layer 3 Lightning network. So those are helping to speed things up. But people will say, okay, well, Bitcoin's not the answer then because it's too slow. We need a different cryptocurrency, one that's faster. So we're going to create a faster one. And then there's like this idea of a base layer currency and then like a layer 1 and a layer 2. And this is a little bit more technical, but you want like a base layer that's very stable, and then you can have layers on top of that that are like faster, right? So the Visa network is more of like a layer 3 kind of network, right? Where they're processing super quickly, but they're also not, the base layer is not on Visa. Visa's just processing it, but then it still has to settle, right? With your bank and things like that. What's happening now is you see that Bitcoin is like the base layer of money. It's stable. It's never has outages. Like, it's reliable. It's transparent, blah, blah, blah. But the Bitcoin community, the Bitcoin, everybody that's working in Bitcoin right now, they're working on solutions to, basically like create rails on top of Bitcoin, like with the credit cards or Venmo or whatever. Like, so they're creating new, UIs around this so that we can more easily or quickly use it, spend it, etc. Kind of like we do now. But then it does settle in 10 minutes, not in like 5 days. Steak and Shake was the first company, I think, that actually accepts Bitcoin payments. Like, you can go to Steak and Shake and pay in Bitcoin. Go try it, guys. But he gave this talk that said Bitcoin is faster than credit cards. I don't know exactly what he meant by that, but he says they're also saving 50% in processing fees. So when yes, you could say, oh, it's slow, it's there's better things, but this is a use case of actually using it, and the business loves it. So it's working. And they said they're seeing growth after accepting it. That's cool. I was like, oh, Steak and Shake's not really a place I want to go. Great segue into, okay, but aren't governments going to tax it or ban it or control it? They could just make it not usable. We've got countries like China have banned it. We've got regulators in the government who are trying to get more tax money. They want to put anti-money laundering frameworks around it. They want to start, tracking Bitcoin payments and stuff, like blah, blah, blah. I will just quickly say, we've talked a lot about this, and I think that this is one of the more, it is still sort of a concern, but we now have a lot of governments now support it. And in the places that have tried to ban it, Bitcoin didn't go away. So like China, India, Nigeria, they tried to ban it, and Bitcoin still survived and thrived there because they can't control it, because this is completely sovereign. Like, they have no way they can't hack into your ledger. If the country bans it, you could be like, well, then Chinese-based companies can't hold it on their balance sheets. They can't sell it. They can't buy it. They can't accept those payments. Great. But people in China can still buy it and hold it. So it's not really, and then they could take that somewhere else if they wanted to. They could take it and leave. And the US is obviously not banning it. So there's very little that you should worry about there. Like, the risk of, the regulatory risk was so much higher even a year ago. And that's why things are really kind of taking off right now, because the regulatory risk has decreased so much. We now have a government that, has passed 3 crypto bills like just this month, right? They're fully supportive of it. This is money and currency, right? So it shouldn't really be a partisan issue to put regulations around money and how it's used. Like, we should be giving regulatory structure on how the banks should use US dollars, right? We have these regulations in place, and now they're updating the regulations to say, okay, we recognize that there's another source of money out here. Let's make sure that we are putting guardrails on it so that people don't get fucked, right? Okay, but it's not secure or decentralized as people think. We've got mining pools that are controlling most of it. Quantum computers could break it. What if the 21 million is hacked into and they make 22 million? What if they make more Bitcoin? So these are all I don't want to say silly, but like basically if you just educate yourself on Bitcoin, you will have a better understanding of that. The one issue that I think that you all are curious about is the quantum computing particular issue. So I have a
Quantum
explanation.
computing at some point could break the algorithm for Bitcoin. Are there countermeasures that they could be put in? You probably understand what I'm asking you. Do you worry
People
about that?
throw
You
this
look
out.
like you look
I do
like you
not
slept
worry about
okay.
it.
You look like you slept okay last night.
It's mainly marketing by people that want to sell you the next quantum yo-yo token. But look, Google and Microsoft aren't going to sell you a quantum computer that cracks modern cryptography because it would destroy Google and Microsoft and the US government and the banking system. And at some point, I don't think it's this year, next year, in the next 5 years, but sometime 10, 20 years out, if there's a hyper powerful computer that threatens modern cryptography, the answer is Bitcoin network hardware upgrades, Bitcoin network software upgrades, just like Microsoft, Google, the US government upgrade all their messaging and banking applications. The key for everybody is Bitcoin's a protocol like the English language and base 10 math. When the quantum computer breaks your calculator and breaks your messaging app, you're not learning base 16 math and you're not going to switch to a different language. You're just going to upgrade your software. And Bitcoin's a monetary protocol. We're just going to upgrade the software, Joe.
If we have a quantum computer that could break cryptography, though, are they going to try to hack into Bitcoin first, or like all of the entire banking system and steal everybody's money? Basically, the quantum risk is the same for Bitcoin as it is for your bank accounts and for the government. Like nothing would be safe. So it's kind of like saying, well, yeah, like what if an asteroid hits the Earth and like it destroys the Bitcoin network. It's like, yeah, well, we've got bigger problems on our hands, people. Like quantum computing is a risk. We've talked about it before, but it's essentially the same. Yeah, if that becomes a problem, then we're all like, everything's fucked. So like, who cares? Last slide. So it's too complicated. It's too fragile to be practical. You need a degree to store it. This is like one of the biggest arguments right now, I think. Also, the power grids could be taken down and then the internet may not exist. Custody is hard. There's transaction errors, blah, blah, blah. You need the internet to like transact. I mean, it is confusing, right? But also, iPhones were confusing in the beginning, right? Like people didn't really know how to use those, and now everybody knows how to use it. Nobody knew what a fucking computer was or how to use that in the beginning either. They're like, what do you mean I touch the screen? What is this mousy thing? Like everybody has to figure it out, but eventually you do. The usability is confusing right now, but there's also software that's making it a lot easier. And this is why the banks are getting on board and different institutions are getting on board, because they're basically making it a lot easier. Like they're simplifying the on-ramps into Bitcoin. Like it's gonna be so easy. I mean, like self-custody is definitely more challenging. I think that's gonna take a lot longer for people to get there, but that just takes education and trust. Like you just have to learn to trust the systems. But right now you could go on like the Strike app and just like buy $5 of Bitcoin instantly. You can buy it instantly on Venmo. Like it's super easy to get it. It's not actually that hard. It's the self-custody that's harder. But also we have a lot of companies that are trying to simplify it. They understand that, the complication is a barrier to entry for a lot of people, and there are a lot of people working on solutions for that. How to make it easier.
Hey man, have you bought any Bitcoin yet? No, I'm not stupid. Bitcoin's like a giant pyramid scheme. It's like Amway for money. Doesn't make any sense based on my inability to comprehend new thoughts and ideas. Have you bought any yet? No way! Bitcoin's way too volatile. Yeah, case in point. Did you know if you would have put $10,000 into Bitcoin back in 2010, that same $10,000 would now be worth $96,939,950. But that same $10,000 held in US currency since 2010 would now be worth $8,840 after adjusting for inflation. Right, that proves Bitcoin's volatile. And volatile is a word that scares me because I don't have any testosterone in my body. I wouldn't buy Bitcoin even if I wanted to because I don't know how. What do you have to do, like go on the internet to buy it or something? It's so stupid. I'm not gonna do that. Nothing is worth doing if you have to learn how to do it. The price of Bitcoin might be going up exponentially, but that makes me insanely cautious about it for some reason. Well, yeah, that's not how money is supposed to work, right? Normal money is a store of value that continuously loses value. That's how it's supposed to be. I love fiat currency. Storing your value in US currency is like holding ice that melts away in your hand. And I say, good. I want the ice to melt because ice is too cold and not volatile at all. It just predictably melts away. You said it. And with Bitcoin, there's only a finite amount of it that will ever be in existence. And that kind of security is only going to hurt the long-term value of it. Precisely. And did you know 40% of all US dollars in existence were printed in the last 12 months? And that's what makes regular currency so valuable because they can print an unlimited amount of it, which makes the value of what you hold in that currency go.
Anyways, it goes on. Yeah, so that was the round out.